R.N. Elliott discovered the wave principle back in the late 1930s. Mr. Elliott, along with many others, had not foreseen the 1929 through 1932 90% crash of the stock market and was determined to see if there could have been a way to predict it ahead of time. So Elliott manually plotted on graph paper the hourly and daily open, high, low, and close data of the Dow Jones Industrial Average as published daily in the Wall Street Journal, and he did so for a number of years. Upon the repeated scrutiny of manually drawing all of the price movements, he was able to recognize a set of recurring patterns or waves. He was also able to document that the different patterns had a limited number of ways that they connected to the other patterns in the series, and did so in a repetitive fashion. Furthermore, he discovered that the lengths of the different waves often had a mathematical relationship to prior waves. The end result of his work was the discovery that price movement in the mass financial markets is governed by natural laws keyed to nature. What he discovered was that progress occurs in 5 waves, and regress then occurs in 3 waves, and that the resulting 8-wave sequence is a fractal, meaning it is similar in form at all degrees of trend. You can see it at work on yearly, weekly, daily, and even 5-minute charts. So here's a diagram of the 8-wave sequence with 5 waves up, also called the progress or growth stage, followed by 3 waves down, sometimes referred to as the regress or decay stage. Notice that the entire 5 up, 3 down pattern exists at 1 degree smaller within the larger waves. So here's the 5-wave sequence up, and then here's the 3-wave sequence down. So these are typically labeled 1 through 5, and these A, B, C. And then within this first wave, notice that we also have a 1, 2, 3, 4, 5, followed by an A, B, C. And then within this structure here is the same fractal. So this entire fractal right here, 5 up, 3 down, can be found within waves 1 and 2, and again within waves 3 and 4. These are called subdivisions. And it's very important to understand the idea of subdivisions and degrees of trend. So the direction of the larger trend consists of 5 waves, and these 5 waves subdivide at 1 lesser degree as 5, 3, 5, 3, 5. This is followed by a 3-wave ABC correction, subdivided in this simplified example as 5, 3, 5. Ultimately, there are always a number of degrees of trend operating simultaneously. The 8-wave sequence appears at all degrees of trend simultaneously. To view the different degrees of trend, one needs simply change the time frame of their chart from weekly to daily to hourly, for instance. Here is the original degree of trend labeling system devised by Ralph Nelson Elliott. The different degrees of trend are defined by Arabic or Roman numerals, capital or lowercase letters, circled or in parentheses, etc. As you can imagine, most charting platforms today do not allow all of the possible labels as Mr. Elliott devised them. So, I use a color-coded system along with font sizes to label the waves. My labeling system can be found all the time at my website, ElliottWavePredictions.com, under the header tab, Degree of Trend Labels. Here's an example of a chart showing labels at several different degrees of trend. Notice that within the blue or minor degree wave 3, for example, there is a pink or minute degree 1, 2, 3, 4, 5 impulse. This is an example of a wave 1, 3, or 5 subdividing into 5 waves at one lesser degree. Now that we have seen the labeling system and understand the concept of subdivisions and degrees of trend, let's look at the 3 rules of Elliott. Number 1. In a 5-wave impulse, wave 2 cannot retrace past the start of wave 1. Number 2. In a 5-wave impulse, wave 3 cannot be the shortest of waves 1, 3, and 5. And the third rule, in a 5-wave impulse, wave 4 cannot move into the price territory of wave 1. So here are examples of the 3 rules at work. Notice that wave 2 blue does not move back below the start of wave 1 blue. If it had, the blue 1 and 2 labels would be placed incorrectly or invalidated. Also, wave 3 blue is not the shortest of waves 1, 3, or 5. That's a requirement. We can just see by the naked eye very easily that wave 3 is the longest of 1, 3, and 5 in this example. It doesn't always have to be the longest of the 3, but it must not be the shortest of the 3. Lastly, notice that wave 4 blue did not move down into the price territory of wave 1 blue. By the way, the word invalidation is very important in the wave principle. All well-labeled charts should include invalidation levels, which show where the current labeling would be rendered incorrect. A 5-wave structure in Elliott wave is often referred to as an impulse. In a 5-wave impulse, one of the waves 1, 3, or 5 is usually extended. Wave 3 is the most likely to extend in the stock market. In commodities, wave 5 is actually the most likely to extend. An extended impulse usually counts as 1, 2, 1, 2, 3, 4, 3, 4, 5. Waves 1, 3, and 5 of an impulse each subdivide into a 5-wave impulse. Rarely, wave 1, 5, A, or C can be a diagonal, where wave 4 overlaps into the price territory of wave 1, and wave 3 isn't the longest of wave 3 or 5. And encompassing trend lines around the price action converge, or they get closer together as time moves along, but they also might occasionally diverge or spread further apart as time moves forward. Rarely, a 5th wave will fail or truncate before eclipsing the extreme of wave 3. So let's look at some examples. Here's an example of an extension, an extended wave within an impulse. Remember that wave 1, 3, or 5 of an impulse typically will extend. One of those will typically extend. Here's the most common one to extend in stocks. It's the wave 3. And the way that subdivides is 1, 2, 1, 2, 3, 4, 3, 4, 5. In this particular example, they've even drawn an additional 1, 2, 3, 4, 5 within the wave 3, in which case you would count it 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5. If wave 5 was the extended wave, and this is the more typical wave to extend in, for instance, gold or silver commodities, it would count as a 1, 2, 3, 4, 5, 5 being the longest of 1, 3, and 5. Now, it's important to know that wave 3 in this example cannot be shorter than wave 1. It's got to be at least a little longer, or equal to. Cannot be the shortest of 1, 3, and 5 ever in a standard impulse. And then within the wave 5 is where you get your extension. 1, 2, 3, 4, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4, 5. Here's an example of an extended third wave. It starts with a nested 1, 2. And when we say nested 1, 2, that means 1, 2, 1, 2. And then it finishes with a 3, 4, 3, 4, 5. Sometimes in a 1, 2, 3, 4, 5 structure, wave 4 will overlap into the price territory of wave 1, and price travels in a contracting or expanding wedge. In Elliott wave, these structures are called diagonals. There are 4 different kinds. There is a leading contracting diagonal. This is in either a wave 1 or wave A position. And it consists of 5 waves. But wave 4 does move into the price territory of wave 1. And in contracting diagonals, wave 3 must be shorter than wave 1 was. Wave 4 must be shorter than wave 2 was. And wave 5 must be shorter than wave 3. You can also have an ending contracting diagonal that is essentially the same structure as the leading contracting diagonal. It's a narrowing wedge. But it occurs either in a wave 5 position or a wave C position. Also, there's something called an expanding diagonal. These are more rare than contracting diagonals, but they do occur, and a leading variety would also be in a wave 1 or A position, and an ending expanding diagonal would either be in a wave 5 or wave C position. In expanding diagonals, wave 3 must be longer than wave 1, and 5 longer than 3. 4 must be longer than 2. And the trend lines encompassing the price action diverge or expand, which means they get further apart as time moves forward. Here's an example of a contracting diagonal. In this case, it's a wave C, and it consists of waves 1, 2, 3, 4, 5. The reason it qualifies as a contracting ending diagonal is that wave 3 is shorter than wave 1, and wave 5 is shorter than wave 3. Also, wave 4 is shorter than wave 2. Additionally, each leg of a diagonal is almost always a corrective structure. By the way, we'll be looking at what a corrective structure is in just a minute. We're looking at the 5-wave structures right now. And there's 2 kinds: 5-wave non-overlapping impulse and a 5-wave diagonal. So here's an example of an expanding diagonal where you have wave 1, 2, 3, 4, and 5. Each leg of the diagonal is corrective. It's not a standard 5-wave non-overlapping impulse. And wave 3 is longer than wave 1, and wave 5 is longer than wave 3. Wave 4 is longer than wave 2 was. And typically wave 5 of an expanding diagonal will try very hard to reach a trend line extending from the extremes of waves 1 and 3, but most typically is unable to quite get there, and it falls just a little short of tagging it. Once in a while, you have a 5-wave structure where all the proper subdivisions are in place, 1, 2, 3, 4, 5 for 1, A, B, C for 2, 1, 2, 3, 4, 5 for 3, A, B, C for 4, and 1, 2, 3, 4, 5 for 5. But wave 5 doesn't quite reach the price extreme that wave 3 did. This is called a truncation, or a failure, and these are rare, but they do occur. And most typically they'll occur after a real aggressive wave 3, where wave 3 stretched out so far that by the time wave 5 gets around, the market's just too tired and it just can't reach that same level again. So to quickly summarize the last few slides, there are two basic types of 5-wave impulses: the standard non-overlapping kind and the more rare overlapping diagonal kind. Now let's take a look at corrective structures. There are three basic structures or patterns that are corrective. The first is a zigzag. And a zigzag, importantly, subdivides 5, 3, 5. Other rules within a zigzag is wave B cannot move beyond the start of wave A, and wave C must move beyond the end of wave A. The next type of corrective structure is a flat. Flats subdivide 3, 3, 5. In a flat, wave B can move beyond the start of wave A, but must retrace at least 90% of wave A. And then wave C almost always ends beyond the extreme of wave A. Then the third basic type of corrective structure is a triangle. And triangles subdivide 3, 3, 3, 3, 3. 4 out of the 5 subwaves must be a zigzag or zigzag combination. And most typically, the lines connecting A and C and B and D converge. They get closer together as time moves forward. There's a very, very rare structure called an expanding triangle that is so rare I'm not even including it in this Elliott Wave 101 tutorial. And then one additional thing that can happen during corrections is you might get combinations of these three structures. And whenever you see that, there's a different labeling system that is used: WXY or WXYXZ. The main thing to remember about W's, X's, Y's, and Z's is that they must be a 3-wave something. In other words, they need to be one of these structures. I include triangles into what I refer to as a 3. When I typically talk about a corrective structure, I might refer to it as a 3. Zigzags and flats can appear as a W, as an X, as a Y, or as a Z, whereas triangles can only appear as an X wave in either of the combination corrections. So here are examples of the basic corrective structures. First, the zigzag. And from the last slide, we learned that zigzags subdivide as a 5, 3, 5. Next is the triangle. And each wave of a triangle is a 3-wave something, almost always a zigzag or a zigzag combination. So it's a triangle. In almost all triangles, the lines get closer together as the triangle moves through time. Another aspect of triangles is that almost always the line connecting B and D will be headed one direction, and the AC line will be sloping in the opposite direction. You can't call something a triangle if both of these lines are both sloping to the upside or both are sloping to the downside. That's called a diagonal. This is a triangle. It's different. Then there is the flat. There's something called a regular flat, and flats all subdivide as 3, 3, 5. And into what is called a regular flat, wave B retraces at least 90% of wave A and usually ends very close to the same level as the start of wave A. And then wave C ends typically just beyond the end of wave A. So it's a very flat structure, hence the name. Then the expanded flat, which is the most common of the flat family, is also a 3-3-5 structure. But in an expanded flat, wave B makes a new price extreme beyond the start of wave A. As a matter of fact, it must be at least 105% of A. And then wave C must end below the extreme of wave A to be an expanded flat. Then a more rare type of flat is the running flat. It also subdivides 3-3-5. And it's very much like an expanded flat, except wave C is unable to reach the price extreme of wave A. So here is a very good example of a zigzag. Zigzags subdivide 5-3-5. Also, wave C's of zigzags are generally less relentless than wave 3's of impulses. So notice how the angle of descent is much less aggressive in the wave C compared with wave A. Finally, wave C ends very close to where it would be equal to wave A in length, which is quite common. Here's an example of a triangle. Triangles can only appear alone as fourth waves, B waves, or rarely X waves. Once a triangle completes, there's almost always an aggressive thrust out of the triangle. The thrust from the triangle is always the last wave of a larger pattern. The expanded flat is the most common type of flat and subdivides 3-3-5. Wave B of an expanded flat makes a new price extreme, and wave C ends beyond the extreme of wave A. In all flats, wave B must retrace at least 90% of wave A. Also, in all flats, wave C must subdivide as a 5-wave non-overlapping impulse or diagonal. The running flat is more rare than the expanded flat and is identical to an expanded flat, except that the C wave can't quite reach the extreme of the A wave. Corrections can also extend. After an impulse completes, one naturally expects a corrective pattern. But just because one corrective pattern completes, that doesn't mean that the larger corrective phase is over. It could be that the first complete corrective pattern is a wave W, and the next thing that happens is a wave X. X waves are most commonly zigzags. Then another corrective pattern might ensue as a wave Y. WXY combination corrections are actually quite common, whereas WXYXZ corrective combos are more rare. Why would a correction extend? Because the first pattern of the correction either wasn't deep enough or was too short in duration. Here's an example of a WXY double zigzag, which is one of the more common combination corrections. The internal subdivisions within a double zigzag are 5-3-5, 5-3-5, 5-3-5. Typically, double zigzags occur in order to extend the length or depth of the correction. Besides the 3 unbreakable rules of Elliott, there are several very helpful guidelines within the wave principle that assist in keeping higher confidence wave counts. The guideline of alternation tells us that within an impulse, wave 4 is very likely to carve out a different pattern than the one already seen in wave 2. The guideline of equality generally means that wave 5 will tend toward equality with wave 1. Also, wave C's of zigzags tend toward equality with wave A's. The guideline of channeling indicates that the entirety of an impulse is likely to travel nicely within a parallel channel. Finally, there's a tendency after a 5-wave impulse for the following ABC correction to end near the extreme of the prior wave 4. How to draw trend lines in Elliott. Now that we've examined all the rules and guidelines within the wave principle, let's look at how R.N. Elliott recommended drawing and interpreting trend lines. In an impulse, when waves 1 and 3 are complete, draw a line intersecting their extremes. Then draw a parallel line and place it at the extreme of wave 2. This gives a target zone for the extreme of wave 4. After wave 5 completes, a break of the line connecting the extremes of 2 and 4 is a strong indicator of trend change. When wave 4 is complete, draw a line intersecting the extremes of waves 2 and 4. Then draw a parallel line and place it at the extreme of wave 3 or 1. This provides a target zone for the completion of wave 5. Also, wave 5s often end at the channel midpoint. If expecting a corrective structure, for instance, a zigzag, once A and B are complete, draw a line connecting the start of A with the extreme of B. Place a parallel copy at the extreme of A. If price moves aggressively through that line, you may be seeing a wave 3 instead of a wave C. So here's the concept of drawing base channel trend lines. Let's say you just got through seeing a corrective structure, in this case a wave 2, and you're not quite certain if you're going to see the wave 3 now, or you're going to see wave 2 extend and eat up some more time. Once you see a 5-wave structure to the upside and a corrective structure finish to the downside, you draw a trend line extending from the start through the wave B or wave 2, whichever it may end up being, and place a parallel copy intersecting with the end of wave 1 or A, because at this point you're not sure whether you're getting a 1 or A or 2 or B here. And then look and see if price aggressively moves through up above and breaks out of the base channel. If it does, there's a good likelihood that what you're dealing with is a wave 3 and not necessarily an extended corrective pattern. This shows how to set up trend lines to set a target for a wave 4. So once you think you have a completed wave 1, 2, and 3, draw a trend line connecting the extremes of wave 1 and 3 and have it extend to the right, and then make a parallel copy and place it intersecting with the extreme of wave 2. This will give you a target for the end of wave 4. Many times wave 4s will overshoot that target by a bit, just as seen right here. Once you believe you have 1, 2, 3, and 4 complete in an impulse and you're expecting a 5th wave, then you draw a trend line extending from the extremes of waves 2 and 4 and place a parallel copy at the extreme of wave 3. That gives you a target for the end of wave 5. And I also like to draw in a center channel line, because many times wave 5s, after a particularly aggressive wave 3, which this was not in this example, but after a more aggressive wave 3, a lot of times wave 5 will end at the center channel point. So we've just seen a way that trend lines help boost confidence in your wave count by distinguishing, for instance, between a typical wave C and a typical wave 3. That was the base channel concept. R.N. Elliott also documented that each of the waves in the wave principle typically exhibit a specific character. Wave 1s generally look like an unobtrusive basing process. Many times during wave 1, No one's quite sure if the trend is going to continue or if we've got a trend change yet. Wave 2s and wave A's are often regarded as continuations of a trend that already ended. Sentiment wrongly reaches its highest extreme near the end of wave 2s. Wave 3s are the strongest and fastest and most relentless. Volume is generally the highest during wave 3s. Wave 4's surprise. After a long, strong wave 3, many market participants believe that the trend will go on forever. And that's why wave 4's surprise. Wave 5s lack breadth. Fewer stocks are having to carry the momentum during wave 5s. Also, volume is generally lower during wave 5s than it was during wave 3. Wave Bs, as Mr. Elliott put it, are phonies and will often fake out even the pros into thinking the old trend is still in force. Wave Cs during corrections are often as strong as wave 3s, but move against the larger trend. This is important. This is an example where you get an impulse, a 5-wave impulse in a wave C position, and it isn't telling you what the direction of the trend is. It's actually moving against the larger trend. So just because you see an impulse doesn't mean that's always the direction of the trend. It could be the end of a corrective phase. I personally stay busy counting waves and many different tradable instruments almost every day of the week, and I've done so for many years. The more experience I gain in wave counting, the more I see price seek out specific targets that have a mathematical relationship with a previous wave. To me, drawing Fibonacci targets on charts has become an absolute necessity. In this video, rather than confuse you by listing every possible Fibonacci level, I'm going to point out the very most important ones. For the most part, the following Fibonacci relationships are the ones you are most likely to run into on a daily basis. These numbers are the ones to memorize. 0.618, and then the associated 1.618 and 2.618. These are all associated with the golden mean. If you ever get a chance to read about Fibonacci mathematics, there's a great chapter in that blue Frost and Proctor book that I recommended earlier. Also, 0.5 and 1.0 are associated with equality, and you see those quite often. And then the others I always look for, depending on the wave count, are 0.382 and 1.382. So those are the biggies right there. The others that you can learn about later, maybe in a later video that I put together about advanced Fibonacci, are 0.236, 0.707, 0.786, 4.236, and 6.854. According to a recent published PDF by eSignal, here are some of the most common Fibonacci targets for each of the numbered waves in an impulse. Wave 2 is most likely to retrace 0.5 to 0.618 of wave 1, and it does that 73% of the time. Wave 3's 45% of the time end at about a 1.618 relationship with wave 1. 30% of the time, they're longer. They're about 2.618 times the length of wave 1. Wave 4s typically retrace 0.382 times the length of the preceding wave 3. As a matter of fact, wave 4s retrace between 0.3 and 0.5 of the preceding wave 3 60% of the time. Wave 5s, typically the net traveled by waves 1 through 3 times 0.618. The next most common is where wave 5 is 0.382 times the net traveled of 1 through 3. And then the next most common is where wave 5 generally tends toward equality with wave 1. If neither wave 1 or 3 is extended, expect wave 5 to be equal to the net traveled by waves 1 through 3. Do not expect an extended fifth wave unless wave 3 was less than 1.618 times the length that wave 1 was. Here's an example of drawing a set of Fibonacci retracements on a chart after a 5-wave impulse for wave 1. And we're looking for a target for the end of wave 2. Remember, wave 2's retrace wave 1's between 0.5 and 0.618 73% of the time according to the eSignal research. Notice the other important level on this chart, that of wave 2 invalidation. Remember rule number 1? Wave 2 cannot move back past the start of wave 1. If price moved up that far, this wave count would be proven invalid, and hopefully you will have been prepared for that eventuality by having an alternate count to fall back on. That brings up a very good point. Always keep an alternate count so you won't be surprised by an invalidation, and will quickly have your bearings ahead of time if your main count doesn't work out. If expecting a wave 3 next, draw targets on your chart for the end of wave 3 as follows. Target number 1 would be 1.618 times the length of wave 1. So as we can see with these red lines with the number of ticks, wave 1 was 154 ticks long. So I just go to my calculator and take 154 times 1.618 and come up with 249, and then start at the wave 2 extreme and draw a target 249 ticks away. And in this example, that is where wave 3 would reach this level right here. And then I draw another target where if wave 3 extends to the next most likely Fibonacci target, where wave 3 would be 2.618 times the length that wave 1 was, then I've got another target down here. Wave 3 will end near one of these two targets 75% of the time. This brings another good point to mind. Remember that the wave principle is essentially an exercise in probabilities. Essentially, Elliott wave combined with the most common Fibonacci price targets will give you a perspective on projected price movement that increases confidence in the odds of your success. Wave 4s typically end somewhere between a 0.3 and a 0.5 retracement of the entirety of wave 3. The 0.382 fib is the only major Fibonacci retracement level within that zone. So use your Fibonacci retracement tool to add all of those levels onto your chart after wave 3 is over. Setting the most likely target for the end of a fifth wave depends on how long your wave 3 was in relation to wave 1. If wave 3 was at least 1.618 times the length of wave 1, expect wave 5 to be either equal to wave 1 or 0.382 times the net traveled by waves 1 through 3, or more commonly 0.618 times the net traveled by waves 1 through 3. The example pictured above shows how I drew all three of these targets, and the most typical one ended up being correct. That's where wave 5 was equal to 0.618 times the net traveled of waves 1 through 3. Also, and very importantly, if wave 3 was less or shorter than 1.618 times the length that wave 1 was, Because waves 1, 3, or 5 of an impulse is typically extended, look for an extended fifth wave by setting 3 different targets. One at 0.618 times the net traveled of 1 through 3. One at equality with the net traveled of 1 through 3. And one at 1.618 times the net traveled of 1 through 3. The shortest of these 3 is the most typical in stocks, and the longer 2 are more typical in commodities. Now let's look at the most likely Fibonacci targets during corrections. In a zigzag, expect wave C to be equal to wave A. The next most likely is where wave C equals 1.618 times wave A. In a regular flat, A, B, and C are each nearly equal. In an expanded flat, wave B is typically either 1.236 or 1.382 times wave A. 1.382 is the most common. In an expanded flat, look for wave C to be equal to 1.618 times the length that wave A was. 1.382 is the next most likely. In a contracting triangle, look for each wave to be a 0.618 golden mean retracement of the previous wave. For instance, look for B to equal 0.618 times A, look for C to be 0.618 times B, and D to be 0.618 times C. Here's a good example of a zigzag. Once wave A and B are finished, and wave A subdivided into a 1, 2, 3, 4, 5 wave impulse, and wave B was choppy, overlapping, and corrective looking, I set a target for the end of wave C to be equal to the prior length of wave A. Wave C subdivided perfectly into another 5 wave impulse, as expected, and look how well the equality target was respected. Also notice that I used the base channel trend line technique, and wave C really never got serious about trying to break through the lower trend line of the base channel. Lastly, look at how wave C moved at a less aggressive angle than wave A did. This is typical in a zigzag, and certainly not typical of a wave 3 had this been a wave 3. Here's an example of an expanded flat. After a 5 wave impulse, labeled wave 1, always expect a correction. Remember that about 3 out of 4 wave 2 corrections retrace between 0.5 and 0.618 of wave 1. So they're relatively deep corrections. In the above example, wave 1 was followed by a 3 wave correction that was more shallow than the typical 0.5 to 0.618. When that occurs, always draw a Fibonacci extension target where a possible wave B of an expanded flat might make a new price extreme before a deeper correction ensues. In this case, wave B of what turned out to be an expanded flat ended very near the most typical 1.382 relationship with wave A. That's a big warning sign that you are not in a wave 3 yet. As you can see, the wave B false breakout, as many refer to wave Bs of expanded flats, was followed by a 5 wave downward impulse that ended a more typical, deeper wave 2. Expanded flats are quite common. Always be ready for them, unless you are in a 4th wave and wave 2 of the impulse was already an expanded flat. In that case, you can look for a different corrective pattern. Thanks to what? That's right, the guideline of alternation. Here's the last example I'll be showing you in this video. It continues with the expanded flat and shows how to set a target for the end of wave C of an expanded flat after waves B and A are complete. Wave C of an expanded flat most commonly ends at either 1.382 or 1.618 times the length that wave A was. So after I got a 3-wave A and a 3-wave B, I'm expecting a 5-wave structure here, and simply measure wave A, take that times 1.382 and measure up from this low and set a target there, and then set another target where wave C would be equal to 1.618 times the length that wave A was, set another target there, set kind of a target zone, and in this case price respected the 1.382 relationship nicely. Finally, I'd like for you to be aware of my favorite quotes from the Frost and Prechter book. I try to be mindful of them often, as they tend to put my mind at ease during times of both success and high stress. The Elliott Wave Principle is a means of first limiting the possibilities and then ordering the relative probabilities of possible future market paths. Trading with the Elliott Wave Principle helps you remain both flexible and decisive, both defensive and aggressive, depending on the demands of the situation. For instance, if you have a main and an alternate count and both seem just as likely as the other, that's a good time to be defensive. If you have a main and alternate count and both call for the same direction next, one could be more aggressive there. Of course, there are often times when, despite a rigorous analysis, there's no clearly preferred interpretation. At such times, you must wait until the count resolves itself. Finally, when you have eliminated the impossible, whatever remains, however improbable, must be the truth. That one's from Sherlock Holmes.